First off, we're getting all sorts of movements from central banks. We have the BOJ standing pat. We have the Fed standing pat as well, but indicated more rates to come. ECB raised rates and also suggesting, rates to come higher as well. I mean, how are you making sense of this environment where it is so difficult to end the cycle of tightening?
Well, I think most countries are concerned with the how embedded the inflation is. And so in the case of the Philippines, there will be a policy meeting next week. And so the previous meeting we post, and I think most likely we are going to have another post because our inflation rate has declined for 4 consecutive months. And we forecast that inflation will be down to our target level, which is 2 to 4% by the fourth quarter of this year, and will be in the midpoint around 2.98 by 2024.
So having said that, how much longer can you stay at the current policy pace? Is there room to cut rates?
I think I would be very conservative to say that we will cut rates this year, but who knows? There will be some developments later, but I think it's just enough that we pause for a while.
What will it take for the BSP to cut rates, you think?
If there is a significant drop in inflation rate, I think that we will be encouraged to cut in policy rate, because the Philippine Central Bank was the most aggressive, one of the most aggressive. We raised policy rate by 425 basis points from 2% to 6.25%. That's I think the next country to us is South Korea, 300 basis points. So I think it's time to maybe consider a policy cut, maybe sometime towards first quarter of next year.
Growth has been pretty resilient. In fact, it's been pretty strong. Q1 coming in at 6.4%.
Correct.
How's Q2 looking? Can it be better or worse? Especially given the fact that when I spoke to President Marcos, he did indicate that for the year it could actually get to 7%.
The inflation rate prior to the pandemic, the GDP growth was around 6 to 7%, and then last year it was 7.6. First quarter 6.4. That's the fastest in this part of the world, faster than India or China. So your question, how does Q2 look like? I think it will be similar to Q1, more or less. Okay. Our target range is 6 to 7%, so it's within the target.
How are you assessing the risk to your projections, given the uncertainties out there? China, a key market. When you take a look as well at the New York Supply Chain Pressure Index, suggesting the deepest deflation in 20 years. And for Philippines, a trade-reliant country, that could impact trade, that could impact demand as well as growth.
The 6 to 7% growth rate already considers slowing down globally of the situation. So, but since our imports grow much faster than our exports, that's good for us, right? But so we downgraded our imports and exports data. But the Philippine economy is driven mostly by domestic demand. Okay, and so although there's a global headwind, it does not affect us too much. Okay?